Hey guys, welcome back. In today's video, we are talking about the investigation of short sellers, the AMC spending plan, the halts, and many more in this video. First, we're taking a look at this. A petition to investigate Citadel and its CEO, Ken Griffin, has been signed by 21,000 people, with supporters contributing $7,746 to promote it, according to change.org. The Biden administration did not respond to this petition, leading supporters to call on President-elect Donald Trump to initiate an investigation into Griffin and Citadel. They also suggest Elon Musk, whose companies have allegedly faced similar predatory behavior from firms like Citadel, advised Trump on the matter. Additionally, they are urging Congressman Thomas Massie and other members of Congress to take action. So this is obviously something that is going viral right now, and it's what everyone wants. Kind of the investigation, the transparency into these short sellers, because what we know is that whilst there are short sellers who are just using these shorts to their plan, there are also short sellers who are abusing the market and exploiting retail investors, and that's what obviously these investigations are into. And so with, again, whether it's Donald Trump, whether it's Elon Musk, who both have companies that have faced these exploits by these short sellers, it is a possibility that they will obviously do investigation into these firms and matters. Now, in our video yesterday, we obviously talked about the relationship that Donald Trump had with Ken Griffin in terms of him calling Ken Griffin out. So like I said, there is a possibility that this is going to happen. And to understand kind of the things that's happening to Donald Trump, we can take a look at this, and it's why it's relevant for us AMC as well. Because firstly, like we talked about, is an investigation into Citadel, who's obviously one of the prime short sellers of AMC. And if you take a look at this, Donald Trump notes DJT short sellers, saying, "There are fake, untrue, and probably illegal rumors and or statements made by perhaps market manipulators or short sellers that I'm interested in selling shares of truth. Those rumors or statements are false. I have no intention of selling." So what we saw was obviously in terms of the fake lies that were made in terms of Donald Trump selling his shares, which caused the price to go down. Now, again, something that we've realized recently was the fact that DJT was being attacked by naked shorts. It was attacked by spoofing and attacked by algorithms trying to push the price down. So the very fact we then saw kind of news about it made sense in terms of all these short selling tactics that they've done in the past, like we've seen on AMC. And more importantly is that following Trump post, DJT shares surged over 10%, prompting a temporary trading halt due to volatility. So what we've seen right now is something that is completely, weird, and it's coincidental because the same thing has happened to AMC, where DJT surged over 10% and it started a trading halt. Now, like we talked about, we've seen plenty of shares in the past before where they've gone up hundreds of percent, even thousands of percentages in a day, yet it doesn't experience a single halt. But when you get a stock that we've seen recently, and again, we talked about this before Trump was even elected, we've realized that DJT was a company that was being attacked by naked shorts, by algorithms, by spoofing. And now, the moment it goes up over 10%, the moment it has anything that can damage the short sellers, it actually faces a halt. And again, it sounds completely similar because it's what happens to AMC. So we obviously understand that every time some institutions are over leveraged on the short position on particular firms, and if these firms were to go up drastically, they will lose a lot of money. Obviously, we will see this halt, and this is what we've seen in the past with AMC, with GME, and we're seeing this with DJT as well. But I think this is just one of the biggest confirmation that we can get that halts are not used to protect the retail investors, but rather they're here to protect the institutions who have done and made bad decisions on risk management, who are extremely over leveraged, who could possibly lose billions of dollars, and that's what halts are used to protect the short sellers who have done that. And we can see that with DJT, we've seen that with AMC, and we've seen it with GME. And so this is what we talked about, and why I started the video obviously talking about why we could be seeing Donald Trump obviously trying to investigate and regulate the short selling that is happening in the market in order to bring fairness for retail investors, in order to bring the transparency transparency. Again, it's only a possibility, so do as that with your will. Now, all we can see here is, I appreciate your concerns, but I think you're misunderstanding the Excel at the AMC initiative. This is not incremental 1 billion to 1.5 billion investment. There's a very little incremental capital being spent over those 4 to 7 years. Our current capex spend is between $175 and $225 million a year. So a midpoint of 200 million a year for 4 to 7 years is 800 million to 1.4 billion. We've also abundantly and incredibly clear that the timing and extent of AMC Go plan will be calibrated according to the box office recovery and trajectory and AMC's available capital, liquidity levels, and leverage ratios. And of course, we'll manage the timing of our Go plan investment consistent with the prudent management of our debt levels, leverage, and liquidity. So this is talking about in terms of the spending plan of AMC and what we're looking at how AMC will obviously use their capital and in terms of going into the future. Now, I think this is very important because something that we've talked about in our previous videos as well is obviously how AMC is going to improve. Now, in our yesterday's video, we talked about how AMC's capital went from 700 million to 500 million. Now, we talked multiple reasons. Firstly, obviously paying off debt. That's one of the biggest and main concerns for AMC and main kind of attacking point for AMC. The next thing is obviously we talked about the various investments. Now, one of which was obviously what Adam Aron has said recently, the $100 million in Coke machines. So this is what we talked about. AMC is willing to invest their money, and you can see here that they're willing to spend somewhere between $175 to $225 million a year. Now, remember that this is obviously what they're going off right now with how much they have, how much they will make. Obviously, if the money they have and they will make, it goes up in the future, it's very likely that they will increase this number as well. And now what we have to focus on and going into the future as well is, of course, the available capital, the liquidity levels, and the leverage ratios. But more importantly is also the box office recovery trajectory. Because one of the things that will obviously respond well is that if we were to see the box office go up incredibly fast, then what we can obviously see is that the investments will go up as well, because that's how we'll make most of the money. Now, some of the things to obviously be worrying about is, of course, available capital and the debt levels, because that's what's also crucial for AMC. Like we talked about, the 200 million they spent will not all be investments. It will be some parts to obviously pay off the debt. And one of the things that we have to understand is that paying off debt will also save them money. And if we look at it in a different perspective, by saving them money, they're obviously able to make more money in the long run. They will have more money to spend on other expenditures. And that's the most important aspect. And so that's why, like we talked about, is understanding what factors are actually pivotal for AMC. You can also see here, it seems almost unreal that AMC closed at the exact price it fell to last night in AM following AMC Q3 earnings. Not that many assets moved much after the FOMC, but seriously, 430, this is not random. So what we saw, and again, with the FOMC meeting, we talked about the 25 basis point cut. Now, what's interesting is firstly understanding the 25 basis point cut will allow AMC to save $5 million in interest payment annually. This is a macroeconomic effect that affects AMC in terms of interest payment, and that allows us to be in a better position. What's more important is understanding, recently we've seen Cinemark, we've seen IMAX all release earnings, and they saw the stock prices go up. In a contrast, where we see AMC release their earnings, good earnings mind that, we actually see AMC's price go down. So clearly there is something going on here. And this is something that we predicted in the past. Like I said, even if we were to see AMC make billions of dollars in one quarter, we will still somehow see the negative news to bring AMC down, to of course suppress AMC. And that's precisely what we are seeing right now. And there's also other reasons, such as, not saying that we have a May 2024 move, but I'm saying that we actually have the same setup, because what we're seeing is AMC in terms of the technical factors to be in the same place. Now, previously when we saw AMC around October and we saw kind of that chart adding up, we did actually see the breakout like we've seen in the past before. We understood that it was the low. Now again, after earnings, we're being suppressed, and that's because they want to give the incentive that people should be selling the AMC shares and shouldn't be buying AMC shares at all, when clearly it's because the institutions want to get into there for themselves. As always, not as a financial advisor, do take us a grain of salt. Make sure to do your own due diligence and research. Furthermore, you have to understand this, and this is one of the biggest reasons for why I always say that they are suppressing AMC, because something that we have to understand was that in the past, The Robinhood initial margin calculation for January 28, 2021 was that AMC took up 65% of their margin. And again, it put them in a very bad position. So this is what we've talked about in terms of how much impact AMC truly had. You can even see GameStop took up 19%. So just these two stocks took up over 84% of their overall margin. And this is for one broker. And remember, this is for a broker. This isn't for a institution to over leverage shorting these stocks, which obviously be even greater. And so by understanding that, we know why they always want to consistently suppress AMC. And you guys, thanks for watching this video. I'll catch you guys next time.